So you've probably heard 100 times from agents, now is the best time to buy. But if you're anything like me, you don't just want a slogan, you want proof. Prices are shifting, inventory is moving. So is now really the right time to buy? That's the question I hear from almost every buyer right now. And here's the thing, Q3 2025 isn't just another cycle. Las Vegas is in a completely different position this year. We've got rising inventory, mortgage rates dipping, but it's still not where we'd like them. Layoffs creeping onto the strip and overall nationally, the national economy. Yes, the water crisis nobody wants to talk about. So in this video, I'm not just going to tell you buy now, I'm going to show you what's really happening with the data so you can decide if buying in Q4 makes sense for you or even 2026. So inventory and price trends. Let's start with inventory because this is where the story gets real. In June, Las Vegas listings with 0 offers shot up 70% year over year. That's almost 7,000 single family homes just sitting on the MLS with crickets. Condos and townhomes, even worse, nearly 88% more no offer listings compared to last year. It's not a hot market. That's a saturated market. Now, here's what makes it tricky. Prices aren't tanking. Median prices are holding steady, still hovering near all-time highs, but here's what you don't hear in the headlines. Sellers are starting to trim asking prices quietly. It's like a silent negotiating war. Now you must be thinking, how do we know when Vegas has bottomed out? You'll know when the days on market shrink. Prices cut, disappear, and buyers start competing again. Right now, we're not there. Comparison to 2006, 2008, back then homes lost half of their value and took 8 to 10 years to recover. This cycle looks different. We've got more cash buyer, more strict lending, investor flips, but also way more new construction. This isn't a carbon copy of 2008, but the fear of overpaying, totally valid. You know, mortgage rates and buyer affordability. Let's talk about the rates, right? The silent killer of affordability. As of September, the 30-year fixed mortgage dripped down to like 6.2, the lowest in almost a year. Great news if you're sick of the 7% rates. But let's keep it real. This is still double the unicorn days of 3% in 2021. So what does that mean? A $500,000 home now costs you hundreds more per month than it would have just a few years ago. And buyers are doing the math. And here comes the question. Are sellers getting offers from buyers who can't actually afford, homes like in 2020, 2008? Of course not. Not exactly, right? Lending standards are tighter, so you don't have people buying 600K homes with a 40K income like before, But affordability is stretched to the max. Buyers aren't reckless, they're cautious. And when affordability tightens, demand softens. Now let's jump to the job market and economy. Vegas isn't just houses, it's the strip, it's tourism, it's conventions, and right now the lifeblood of the city is slowing down. Casino foot traffic was just down about 10% in July, still 20% below pre-pandemic levels, such as fewer tourists, fewer tips, fewer hours for workers. Now the question comes, is the market shifting because of job losses? Yes, tourism softness trickles down to housing. If bartenders, casino workers, and hotel staffs aren't confident in their paychecks, they're not signing 30-year mortgages. People ask, are Vegas jobs secure? Depends where you sit. Hospitality is leaner, automation is creeping in, and conventions are still slow to recover. If you're in a stable industry like tech, healthcare, you're okay. But for strip workers, it's a little bit shakier than recent years. Thinking about relocating to the Las Vegas Valley? Well, I've got just the thing for you. My team and I have actually taken the time to create the ultimate relocation guide, which is meant to save you hours of research from top employers to the best hospitals and boatload of other things that you need to know before making the move. The best part is that this guide is 100% free. That's right, 100% free. Just click on the link in the description or the top pinned comment. Hope that helps. Water and environmental concerns? All right, well, let's tackle the big one everyone whispers about but rarely faces head on. Water, 2/3 of Nevada is in drought right now, up from just 28% a year ago. That's a pretty good reversal. Still sitting at about 35% capacity, technically a critical level. Yes, conservation measures are working. Vegas has slashed, per capita use by 55% since, the early 2000s. And now you even got water patrol inspectors cruising neighborhoods, issuing fines for overwatering lawns. So when people ask, isn't drought a deal breaker? Then the answer is, well, not yet. Vegas has done more than almost any other desert city to stretch its supply. But long-term buyers need to face reality. Water can be a risk factor, but I can't tell you that whether it really will be or not, because I'm not really a water expert here. It won't crash the market tomorrow, but it looms in the background. Now let's crush the myth that values always goes up. Here's how it actually works. Appraisers look at comps, recent sales nearby, condition, upgrades, the neighborhood. If your neighbors sold high, your appraisal goes high. If they sold low, you're dragging down with them. And is it realistic to assume values always rise? No, Vegas is historically a boom and bust market. We've had wild appreciation years, but also long plateaus. The only guarantee is that your value depends on demand, and demand depends on jobs, rates, and affordability. The next one is the hidden and extra cost buyers forget. This one gets buyers every time. They focus on the mortgage payment and forget the rest. Insurance, rising premiums across the US mean higher costs in Nevada too. HOAs and master plan communities, fees can run anywhere from $50 to $400 a month. You want that gated community or pool or guard gated, pay up. The taxes, still lower than most states, but with the budget gaps, don't assume they'll stay frozen forever. Foreign buyers add compliance costs, currency transfers issues, and tax considerations. Here's a question you ask. How much insurance do I need? Full replacement cost liability. Don't underinsure just to shave a few bucks. And then builder incentives and buyer opportunities. Here's some good news for buyers. Builders are finally negotiating. In Q3, we're seeing closing cost credits, free upgrades, even rate buy downs on new construction. Builders want to move inventory. So unlike 2021, where it was take it or leave it, in 2025 and in 2026 next year, you have leverage. Want that upgraded appliance package? Ask. Want upgraded countertops? Push for it. You got that bargain power this quarter. This is not just about fear, it's about opportunity if you play it smart. So let's answer the big question. Why buy in Vegas at all right now? Because growth doesn't stop. Vegas is landing massive projects. Warner Brothers, Sony Pictures development didn't get approved right now, but they're still fighting for it. The A's Stadium for baseball, the Brightline West Railroad connecting California. These aren't small moves. They're long-term economic anchors. Haas F1 team in the Inspirada area, that's gonna employ like 500 people. Opportunity zones and up and coming suburbs, suburbs are where smart investors look. You're not buying a quick flip. You're buying into areas with future demand built in. So here's my bottom line. Don't buy because an agent says it's always a good time to buy, because you've looked at the numbers, studied the trends, and found leverage. Inventory is high, rates are dipping, builders are negotiating, and maybe in the long term, water remain a risk maybe, but jobs and maybe in the long term, economy can be a concern. If you want to cut through the hype and get the full Q3 2025 market report, just click, just let me know. Chat one-on-one about your options. I've got you. You can also fill out your information and I will send you monthly market reports. Click the link in the description below. Let's make sure your next move is smart, not hasty. But before you click away, I want to hear from you. Would you rather buy now or high price with high prices and slightly lower rates, or wait, and risk rates dropping but prices jumping up again? Drop your thoughts in the comments. I'm curious to know what you're looking for in this market. And hey, thanks for watching, and I'll see you in the next one.